A lot of news in the markets last week: Apple's keynote, attorney generals gear up to go after Facebook, and activist investors made demands to AT&T. But WeWork and its IPO definitely monopolized the headlines last week.
WeWork.
This is In Focus with the Silver Report, where we take a look at a company, companies, or markets that made Wall Street's news cycle to determine sentiment and decide whether we should be buying, avoiding, or holding. We've heard a lot and read a lot about WeWork over the past 2 weeks. There's been a lot of bad news coming from WeWork's way. As the company gears up for its IPO, the one-time unicorn has lost some of its magic. The issues. I've written about the Wall Street unicorns that were to go public in 2019 earlier in the year, and WeWork made that list. The list featured companies that Wall Street couldn't wait to invest in, like Uber, Lyft, Airbnb, Slack, Pinterest, and WeWork. But now that the day is almost here, Wall Street doesn't seem too excited about investing in WeWork anymore. Some of the issues surrounding WeWork currently are the valuation. Not that long ago, SoftBank, a major WeWork investor, valued WeWork at $47 billion. Now the company is seeking a valuation between $10 and $20 billion, according to reports. There's also concern about the three classes of stock, with the B and C classes of stock carrying 20 votes per share. There's also the procedure on how a new CEO would be named should Adam Newman, the CEO, die or become incapacitated. If Newman was unable to run the company, his wife, who is not a director of the company, would choose the next CEO with the assistance of 2 company directors. There's a decent-sized list of issues surrounding WeWork, which you can read about, and I'll leave the links to those stories in the description below. Changes were recently made to correct some of the issues I just spoke of. For instance, now those classes of stock that carry 20 votes per share carry 10 votes per share. But still, there's a lot of red flags and warning signs coming from WeWork. Investing in WeWork. I usually stay away from IPOs, and I plan on doing the same with WeWork, but for those who want to invest in WeWork or are thinking about investing in WeWork, the questions you need to ask are: who is Adam Newman, and can he lead WeWork to the promised land? We know Adam served in Israel's military for 5 years and was discharged as a captain. We know he went to the Zicklin School of Business at Baruch College, which is not a name you'll hear nationally, but it's a well-respected business school in New York City. Since starting WeWork, Newman has acquired several high-priced properties in New York City, Central New York, and San Francisco, according to Business Insider. Aside from his real estate investments, he's invested in several other ventures like Faraday Grid, Intercure Limited, Equity B, and Home Talk, to name a few. According to his Wikipedia page, Newman did start a co-working space prior to WeWork. He was able to sell his portion of that company, Green Desk, and use the experience he gained to start WeWork. This small view into Newman's past is impressive, but can he lead WeWork and the company's investors to the promised land? Is he Mark or Evan? In the current investment climate, when I look at a young company for a possible investment and I analyze the CEO, the only thing I need to figure out is he Mark or Evan? I don't know Mark Zuckerberg or Evan Spiegel personally. I can only make assumptions based on what I've seen and read. But Mark and Evan and the companies they lead are good yardsticks for me to measure many of the hot unicorns coming public. What I've taken away from Mark Zuckerberg is that he's a calculated individual who is thinking years ahead of the average Wall Street analyst and investor. This was demonstrated in his "there will always be a free version of Facebook" response to analysts who swore that Facebook had to charge users a fee to be a successful company. Another example is Facebook's acquisition of Instagram. Wall Street hated it at the time. Now Instagram is the hottest thing in social media. I also see Zuckerberg as someone who listens but doesn't follow Wall Street. Facebook and its growth remains in his vision, and so far that's worked out very well for shareholders. Facebook went public at $38 per share and now trades at $187.19 as of this recording. With Evan Spiegel, I see the not-so-cool kid get cool and then lose focus. He reminds me of the Patrick Dempsey and Nick Cannon characters in Can't Buy Me Love and Love Don't Cost a Thing, respectively. As his notoriety increased and his coolness expanded, the focus on Snapchat decreased and Snapchat lost some of its coolness. It also seems to me that Spiegel listens intently to Wall Street, which I believe was a reason behind the terrible Snapchat redesign. Snap went public at $17 per share and is trading at $16 per share as of this writing. Which one is Adam Newman, Mark or Evan? Will he be intensely focused on WeWork and building it into a juggernaut real estate company, co-working company, or what have you? Or will he lose focus when he becomes the next tech billionaire cool guy with a public company? When investing in companies like WeWork, Uber, Lyft, Beyond Meat, and so on, since there isn't much of a track record, investors are forced to bet on the jockey, not the horse. WeWork is like many tech companies over the last decade, growing revenue at a good clip, but losing money, with no break-even or profitable quarter in sight. WeWork is another horse in the race, no bigger, better, or faster than any other horse. It will come down to how good a jockey Adam Newman is and how much he can get out of his horse. Why the jockey is so important. When I analyze WeWork, I see enough good and bad for a bull or bear to make an argument to invest or stay away. WeWork believes there's a $1.6 trillion market for what they offer. That's definitely a positive. The company's ability to attract customers like Salesforce, GE Health, and Dropbox shows investors that WeWork is more than just a place for startups and freelancers to hang out. The company operates 528 facilities in 111 cities and has over 500,000 members, another positive on the part of WeWork. But then there's the bad, much of it related to the corporate governance that I discussed earlier. There's the issue of the long-term leases WeWork signs with its landlords versus the short-term leases members sign with WeWork. Many analysts believe that this will cause WeWork to go insolvent should we hit a recession, and that's a fair assessment. IWG, formerly known as Regus, was WeWork before WeWork. Regus filed bankruptcy protection following the dot-com bubble burst. After a few years of struggles and a name change from Regus to IWG, the company regains its footing in the market and is now valued at £3.5 billion. There are many obstacles ahead for WeWork. Having the right person steering the ship or riding the horse will be extremely important to the company's long-term success. Sitting on the sidelines. As with most IPOs, I'll be sitting on the sideline gathering intelligence. I'll be looking out for how Newman & Company handles the current negative press surrounding WeWork's corporate governance. I'll also be looking out for how the company handles its first earnings release as a public company. Quarterly earnings are a different beast when you're running a public company and you now have to answer to the public. Add to that the investment media, me included, dissecting every number in the earnings report and every word of the earnings call. I'll be looking out for how Newman handles the first of many big price drops in the stock price. And lastly, I'll be looking at Newman's growth as a CEO. Will he morph into the next Jeff Bezos or the opposite of that? While I have no plans on investing in WeWork when it hits the market, a no today doesn't mean a no next quarter or next year. This is where I leave you. If you're planning on investing in WeWork, let me know what your reasons are on Twitter. Tell me what you love about the company or the management at Seville Report, #WeIPO. If you want to step your investment game up or just get started investing, our new quarterly investment newsletter is available at sevillereport.com. This quarter, we have 2 solid recommendations and articles that will help make you a better and more informed investor. Thanks again for checking out the Silver Reports in Focus.